And then it went up again, and it just kept going up, and it's up again today. It's doing really, really well. It's up over 200%. So, you know, we're really happy with that. One thing that I would say, just on that, as a bit of an aside, when you're trading, think in terms of percentages. Don't think in terms of dollars. If you say, you know, it's up 200%, your mind goes, yeah, so that's just a number. If you say, oh, I'm up $1,000, you know, suddenly I'm thinking, oh yeah, I can spend, you know, and particularly if you've got a larger account, you know, let's say you're up $10,000, suddenly your mind's going, oh, new car, new lounge suite, overseas holiday, you know, and there's a lot more emotion to it, so it's harder to stay objective and just say, well, the market's telling me to stay in. So try and, you know, I'd suggest just develop that habit of thinking percentages, not dollars so much. Okay, so there are our two trades. As I said, our system kept us out of one, kept us out of both in a way, down here, got us in here. And if you do our course, you'll see why that is, because we've actually developed the system to put the probability in our favour. That's what trading is. It's a game of probability. The more you can stack the odds in your favour, the better the chance that you're going to win the game long term. Okay, so those charts we were just looking at, I probably should have done this first, but they're called candle charts. And candles are, as I said, you know, there's something Ophelia's great at. She does really, really well understanding them. In fact, I'll come back to that. A candle's just a way of depicting what the market does. So here, we've got a candle that opened down here, flipped down a little bit, went up, and closed sort of up there. If it does that, if it closes above the open, then it's a green candle. And on your chart software, it's normally showing as just a green open candle. If it opens up here and it closes lower, it's a solid red candle. So straight away you get a picture that, you know, it's red, it's sort of, you know, down and angry and all of that. It's a warning sign. And so it just, I find, and I think I speak for Ophelia as well, that visually it just triggers so much quicker than looking at this sort of, you know, bar that really doesn't do anything, doesn't say anything particularly. These are much more visual. So when you get a whole chart, much easier to see. Now I started to mention, we had a friend come over, this is years ago now, probably 5 or 6 years ago. She's the first lady who ever we allowed to watch us trade, because we've been trading for years. I met this lady at a seminar and she said, you know, I train people how to trade, but I've never seen anyone actually trade full time live, and I thought that's a bit weird. You know, she's training people, and so she asked if she could come and watch, and I said, yeah, sure, you know, come on over. We set a day. So because she was coming to watch us trade, we thought, well, we better do something, because quite often we'll just trade on a day chart, so there mightn't be anything that we do on a particular day. So because she was coming over, we thought, well, we'll trade on an intraday chart. I think we chose a 5-minute or a 1 minute, something really short, so that we were going to get lots more opportunities. And so we were there, she was watching, and about 11 o'clock in the morning, Ophelia said, let's have a coffee. So she got up, she went out and made a coffee. She came back in, and our office was just a front bedroom that had been converted to an office, so we had the computers sort of over in this corner and the door was over there. She stuck her head in the door and just said, oh, that's a buy, can you buy that for me? And so we placed the order. And, you know, our friend who, as I say, she'd never seen anyone trade, even to this day, she's just amazed at how easily and naturally Ophelia can just look at the candles and go, yeah, that's what it's telling me. And so, as I said, in our 3-day course, Ophelia will actually tell you a little about that, what she does, what the candles say to her. And while I'm singing her praises, you'll notice here there's this lovely silver cup on the table. Last year, in March last year, we had a financial planners conference, and there were 200 odd advisors plus their spouses, and Schroders, who's one of the financial planning companies, fund management companies that we deal with, ran a competition to see who could most accurately pick where the Aussie market, the US market, and the Aussie US dollar would be in October, so 6 months out. And out of all of these advisors and their spouses, Ophelia was the one that won. And she won quite comfortably, actually. I was sort of, wasn't at the bottom of the pack, but I was a long way behind her, that's for sure. And so Schroders presented this cup to her, which we were supposed to return last week, but we thought we'd hang on to it tonight so that we could show it off a bit. But yeah, so, Ophelia, she's a great analyst, she's a great trader. I'm very proud of all that she's done and accomplished. And in our course, she'll actually have quite a lot to share about that. So just thought I'd throw that in for you. Okay. Now, I said earlier, we've got a formula for working out how much of a share we buy. This is pretty much it. We never risk more than 1% of our capital. So, it means that our positions are pretty small and our stop losses are pretty tight, but it keeps us in the game forever. You'd have to get, 100 trades in a row wrong, and I could never imagine that happening. So we risk 1%, and then we work out just what our account balance is, where our entry price is, where our stop loss, we work out the difference, divide the two, come up with the position size. So won't bore you with the maths or anything at this point, but in our course we sort of go through that much more slowly and give the logic behind it and everything. We always use a stop loss. A stop loss is a standing order with the broker that says if the market trades at this price or below, we're out straight away. No questions, we don't get the chance to ring up and say, oh no, I don't want to do that. It's just done. As I mentioned before, we don't trade stocks that gap around a lot. For CFDs, we do trade them with options and other things, but when we're trading CFDs, we like stocks that move in pretty consistent patterns. So we don't trade BHP or Rio or News Corp, things like that. And because we're paying interest, we also use a time stop, which again, I won't bore you with the specific details, but basically we give the market 3 days. If it goes up in 3 days, great, we'll hold on to it. If it doesn't, if it just sits there going sideways or something, we don't want to be paying interest on something that's not earning us money, so we ditch that and we'll go and find something else. So that really, that's probably the key, I think, to what's kept us in the game for 16 years. It's having sound money management. It's not about having a great entry system. Yeah, we've got that. But the best entry system in the world is pretty useless if you don't have the money management to back it up. And so for us, this is the most important thing. And if you get nothing else out of tonight and you're trading, I really encourage you to look at those 4 rules and to start applying them, because they'll keep you in the game forever, pretty much.